Hello, everyone, and welcome to SCORE Fairfield County's live webinar, The Power of Crowdfunding and Other Alternative Financing Options. I'm Tim Ryan, the webinar coordinator and a business mentor here at SCORE Fairfield County. I'll be your host. Our presenter today is Bill Schloth. More on Bill in just a minute. First, some brief information on SCORE. There's over 320 offices and 11,000 volunteers nationwide. We're part of the Small Business Administration. SCORE Fairfield County itself has 130 volunteers with a wide range of industry, process, and subject matter expertise. We offer three primary value-added services to small business owners. First, free one-on-one counseling. Second, educational workshops and webinars, over 150 per year. Third, extensive resources on our website, including Word and Excel templates to help you build your business plan. SCORE puts on many webinars each month. Look for future events on our webinar calendar at fairfieldcounty.score.org. Some useful information about today's event. If you have a question, please use the chat window at any time during the presentation. It's located in the lower part of your screen. Our webinar will end at 1 o'clock to respect your time. The session is being recorded and the link to the recording will be on our website within the next couple of days. Now our speaker. Bill Schloth has been investing in, managing, buying, and selling startup and emerging businesses for over 25 years. He is an executive director and founding member of Crowdfunding Global Alliance, Inc., a nonprofit organization dedicated to providing education and advocacy for crowdfunding. Mr. Schloth is a CPA and has an MBA in marketing from New York University. Bill, I see you're not sharing your screen. You took it down apparently. Try to reshare. And you're also on mute.
Tim, can you hear me now and see?
I can hear you now, yes.
Can you
Still
see?
Not seeing your screen though.
Strange, it's not, you're not seeing the screen. Is that better?
Not seeing it. You gotta hit the share screen button, select what you want to show, and then hit the OK button, I guess it is.
Yeah, it's slideshow. Just bear with me. Play from start, but it's not letting me show the screen. Just bear with me, Tim. For some reason, it's not letting me show the screen. Oh, bear with me, Tim. I think I got it. Sorry about that. Apologize for that. Do you see the screen now?
I see the mountains now.
Okay, that's where we start. We have to climb just up the mountains. We'll be back down and I'll start this show and get going. Sorry,
there you go. You're in business.
We didn't have the screen up there when you were showing, but we'll talk a little bit about it. So welcome, everyone. It's a pleasure to be speaking with you. Sorry for that slight technical glitch. It's these times, but I just wanted to, as Tim mentioned, I've been in the entrepreneurial game for 35 years. It's been, you see the good, the bad, and the ugly. And now we have COVID-19, which is adding some new challenges. I like to usually start my presentations with some lightness. This is sort of a joke, and then we just get, into the details. How can you tell if someone is an entrepreneur? The answer there is really, don't worry, they'll tell you. I bring this up because, and in my experience, I've learned through the ups and downs that the attitude you have is really what drives how things evolve out. And I've come to the sort of conclusion that life is 10% of what happens to us and 90% of how we react to it. And we're in charge of our attitudes. I bring that up because, it's not an easy journey, but I like the place to start there. So I have a positive attitude. Speaking of a positive attitude, you might say, wow, you're going to start with the top reasons for startups failing. I don't like to sort of the ones that don't have, the attitude set right now should really see this, in my opinion, as the top challenges you're going to face to succeed in your efforts as an entrepreneur. I start here because one of the biggest is no market need for the product. And we'll talk about that. SCORE has presentations on just that, but that's the biggest. Right behind that is the running out of capital. And I do like to add these because no matter what we're presenting today, a lot of these items you really have to think through as you develop your plan and move ahead. Quickly, let's flip through them. Not the right team, get out-competed, pricing cost issues, use unfriendly products, product without a business model, some poor marketing. So I bring those up because those are challenges that we're going to see through everything. Now, when we start talking about running out of cash, we'll start getting into what we're going to talk about today. But I want to point out, if you address the other items that show up here and consider them in your plan, actually running out of cash can be reduced, can be made easier if you have to. So I like to start there just so everyone sees how this all works together to succeed in your plan. Want to jump through just the types of funding. I'm going to treat this, a lot of times the organization works with, new entrepreneurs, and I'm going to try to keep this simple. There's other things that we can go a little deeper, but I want to try to keep this bit 30,000 feet up. So types of funding sources. When we talk about the traditional paths, what you see here is your friends and family, a famous word. I'm often get very concerned on that because you want to make sure things are done correctly, or there could be issues later, but that is a source when you're excited. The next item we move down into is your independent angel investors. Those tend to be your wealthier entrepreneurial backgrounds they have, but they're seeking for, infancy stage type businesses. I do want to point out that audience because of COVID, as well as this next audience, which is your venture capital investors. A lot of people have heard that term used and immediately go to that term of where they might find money. It is a source. It's a source that's more sophisticated than your individual investors. And that's another area I'm going to just mention some of the stats about. I'm trying to bring some of this back to today. We've dealt for a year with the COVID-19 situation. We're going to continue to be dealing with it. So I'll talk a little bit about how these guys are now looking at their investment approach. Banks, credit unions, definitely another source. However, you find that a bit tougher to get through, in my opinion. There's much more underwriting, and all of these come back. This is a private equity investor. That's a later stage type investor, fairly sophisticated. They're looking generally for something that has profitability. Those are your traditional paths. Now, what I'm excited to talk about, because of what opportunity we have to market and the meat of this presentation. I do include this one item though, and I hope all of you explored it. The SBA has a lot of opportunity there, but government has increased the support. And I know there's reference material for it in the stimulus area. I consider that an evolving trend, and it's something to always explore. You're going to hear me talk. I'm going to use the word social funding because I like that term, but we'll switch it really. It's crowdfunding. And we'll talk a little bit about where that term all comes from. And finally, depending on the time, I'm going to move into some performance-based other types of financing that you can consider. But let's start with what is crowdfunding. Basically, crowdfunding simply refers to the idea of raising funds for a project or a cause. I want to make sure I include the nonprofits in all my presentations. Through a large group of people, online, individuals or small businesses can take advantage of it to get early stage support for their ideas. We're going to stick with the smaller businesses, but as you see, you're going to see a lot of larger organizations are now jumping into this game. Types of crowdfunding. You'll find rewards-based crowdfunding, which you see backers giving a small amount of money in exchange for a reward. We'll talk about a couple of examples. That could be a discount on a product. Could be some new music item that comes out, but it's some type of discount incentive for them to get in early. We're seeing out there debt crowdfunding. And this is lenders make a loan with the expectation to make back their principal plus interest. It acts like a bank, but it generally is a lot quicker, and it's funded by organizations that are familiar with the industries and have larger audiences than maybe a bank. Equity crowdfunding. Now, this is where you're going to see the investors invest small, large amounts of money, companies in exchange for a piece of the ownership of your company. This is where it gets into that ownership. We're going to talk about hybrids of these, but that's equity crowdfunding that I'll start with. And the fourth one is your donation-based crowdfunding, where donors donate a small amount of money in exchange for gratitude and a feeling of support. Before I go further, I am going to mention crowdfunding portals, actual names of companies. I'm not saying they're any favorite of mine. I'm not favoring one or the other, but I do want to mention them. The material is going to be around, so you can see more about the different portals. We'll talk about portals, what it is, in a moment. As I said, we're going to primarily with the business world. I'm going to focus more on equity crowdfunding. What happened this morning? I just want to point this out, and this is what happened this morning in my email. This showed up, and this was, I thought, a great place to start. This was a crowdfunding offering. It went to my email. I had signed up for that, but this is going to be one of the biggest powers you see related to crowdfunding, is that at your fingertips, items are popping up. Now, the three pieces that we talk about is something like this shows up in your email. It's got to catch your eye. We're going to talk about marketing a little later. So you generally see something that grabs your eye, and a lot of times you'll see a video. Very important piece of it. It's not as expensive anymore as you might think to have a really good video produced. And I know there's resources even talking about it with SCORE. But that's an important part. Picture says 1,000 words. And generally what you see in this teaser is a couple of bullets, a couple of highlights that talk about traction. Now I've finished up my coffee. I could have pressed the button and pretty much invested in this company this morning. I didn't, but I want to emphasize that when I saw this company and it said, you can't, probably those, that with the eyes, it says this company is simplifying diabetes management. Now, my eye went right to it because my sister has diabetes. Said I didn't invest this morning, but this is now on my radar. And what I want to emphasize at this point, maybe I don't invest, maybe I go buy their product. Another powerful piece of crowdfunding that you wouldn't see otherwise in traditional financing. Crowdfunding community. I'm going to give you some stats. It's a CPA in me, but it's real powerful to look at. In 2020, there were 6.5 million crowdfunding campaigns hosted. Campaign is someone looking to raise capital. 64% of the US consumers are aware of crowdfunding now. $65 billion has been added to the global economy through crowdfunding. And this is very important, 22% is the global average success rate of crowdfunding campaigns. Regionally, the US is the leader. Well, actually, the US is leader by far. The North American kind, but the US is the leader. And this chart just shows you it's all over the place. And you can get to these people, again, through electronically. So I'm going to jump a little bit into now. We talked about traditional methods of funding, but let's take the two and I'm going to compare them earlier. So across the top, the bank loans, we talked about the venture capitalists. I sometimes like to include those more sophisticated angel investors. It might be, like myself that have been doing it for a while, and they start digging a little bit deeper these days, especially because of the current economy. And then we go over to crowdfunding. So collateral is you putting up assets, you putting up equity in your house. They won't go take it unless something goes wrong, but banks need it and venture capitalists usually demand it. It's a personal guarantee. Crowdfunding, it's not needed. Time required. Generally with the bank loans, especially today, there's a lot of paperwork that goes along with this, and there's a lot of underwriting. So getting a bank loan these days has an extended period of time. Same for the venture capital world. We'll talk about the percentage of deals that are actually funded later. I'm not knocking banks and venture capitalists. I just want to emphasize during this that there's opportunity to pull in money and some other items. So the relationships you need to have going into these types of funding. On the bank side, you see, generally you need to have a relationship with them. That might be a big deposit. In the venture capital world, it's really who you know. And it has become tougher to pull money out of them. But the thing about crowdfunding is you can gain some support from many people that you don't know at this point. And that could be across the world. We talked about success rates. With bank loans, it varies. And it's especially tough on startups and emerging companies. They generally want to see some type of startups, and you guys just getting out there, have a couple items, I'm sure, that you could say, hey, I'm making traction, but I may not have revenue just yet. They start looking more towards that. The venture capital world, this is a stat from prior to COVID-19, is only funding under that percent of the deals they see now. Moving over to the crowdfunding side, it varies by platform. I know I haven't explained platform yet, but you're going to hear about portals, and you might have heard about them already, but that's where funding needs to take place in order for compliance and reporting. Management control, huge one. You guys with startups, merging ideas, last thing you want to do is have someone take a big chunk of your company. And management control, no, on the bank side. But again, the other items have to be considered. Venture capitalists, I've even crimped down more, but they clearly want to have an influence. I use the word large because we'll talk about they can demand certain things to get you money. The crowdfunding side of things, there is no management control loss. Some of the bigger deals being done these days now, which we'll talk about size, there is some desire when a certain portion of money is put in by a party that they get involved. So the funding side, that's where I've played on this side of the world for 30 some odd years. And those are the funding sources of the company. And what I want you to take away, a couple items from this, is especially the fact that through crowdfunding, it'd be great to get listed, be great to grab money, but there's, I believe, some of the more powerful items just as much as we see with the money, and that's gathering feedback from customers, partners, backers. You'll know, you can validate your plan, your idea, and gauge the size of your audiences by getting some news out there. There's market insight you'll gather, your potential customers. And boy, you'll find people, if all goes well, you'll have people that become sort of ambassadors because they believe in what you're doing. Those were never considered when I was out running around trying to attract capital with my presentation, wearing out my shoes pretty much. But nowadays, through the digital, we're able to go further. And I want you to understand those two pieces: funding, but also huge amount of opportunity to learn more about your business and test some stuff. So regulatory trends, I'm gonna keep moving along here. They're making it more achievable, the government. And I'll say that because for the last 80 years, private companies could only raise capital from accredited investors. Accredited investors are generally wealthy individuals, probably about 9%, 10% of the population. Sorry, that says 2, it's even less. I think it went up a bit. So here we go. On April 2012, the president signed legislation called the Jobs Act. And it had a title, Jumpstart Our Business Startups, allowing entrepreneurs to go to the crowd and publicly advertise their capital. That could not happen before. In 2016, it's called Title III of that act that went into play. You run into what's called, I'm going to bring up, Regulation CF. That's Regulation Crowdfunding went into effect. What did that do? It allowed private early stage companies to raise money from all Americans, all the world, actually, because whoever you can touch digitally. So what that does now is startups can now use equity crowdfunding. And believe it or not, you're seeing more and more of it that actually think people like your customers, your suppliers are becoming investors, which what could you ask for better in aligning investors with your business plan? So here we bring this fast forward to January this year. SEC published new rules. And it's a long term. They didn't give an acronym. It was facilitating capital formation and expanding opportunities to improve access to capital. Main mission again, let's allow our small businesses to get to money that is supported by the people investing. I don't want to say that there is compliance with all this, so I don't want to say any of this is an easy exercise. That new rule went into effect real quick. Regulation CF, listen for that word during it, and this item you'll hear about, Regulation A+. The difference between the two is Regulation CF is the dollars amounts that's involved in raising money. Regulation CF used to be $1 million. This new law is moved it. It's done to $5 million. Regulation A+ is now your bigger crowdfunding rounds. And the other item about would be difference with what compliance is involved. With Regulation CF, there's only a form. With Regulation A+, you have to go through the SEC. So just keep those names in mind. You'll hear about them. Regulation CF, mainly for this audience. So case study, which does show the power of who we can get to now. It is a Regulation A+. This company recently, about a month ago, raised $29 million. Some of the key items that you're going to look for is they raised it from 9,000 investors. The average investment size was $2,914. And if you recall, I talked about accredited investors, a small percent of the population. This unaccredited world is most of us. And now you have the opportunity to invest. There is limits. I won't get into the details of it today, but there is limits. Another huge piece of this deal that went down that shows the power is internationally. My deals I used to do, drift around New York, getting internationally, I had to go over there. So 34% of the investors are in this. And just so you understand how easy it is to take money. We didn't have this back then. We have digitally, credit cards was a top funder of this. Checks, wires, ACHs, and I need to watch the word, but there was the cryptocurrency involved, small piece. So let me dig a little bit more into comparing venture capital versus equity crowdfunding. And I want to give you some pros and cons. Which one might be better for you? So I want to make this point though, aside from the friends and family rounds, they believe and they may rush into something with you, you're excited. The independent angel investors, I like to put a slash with venture capital for this presentation, but they've become more cautious, rightly so during this environment. Venture capital, how investors and the venture capital side are reacting to COVID-19. You're seeing the VCs, considerable drop in startup valuations. Valuation is the value they attribute to your company. So they're putting a lot more pressure on that. VCs are taking fewer meetings and they are investing in fewer deals. And finally, some of them you'll find, and they almost publicize this type of approach they're taking, they're ceasing all new investment. Instead, they're choosing to deploy their capital across what they have now. So a quick chart on the investment pace of a venture capitalist during tough times. When I look here, you're seeing the unfortunate events of 2001. You're seeing the crash of the real estate and items in 2008. So VCs in times of uncertainties, obviously we're moving in, this goes up, it ends at 2012, but we are in mode of COVID-19. Crowdfunding trends, and this is from Start Engine. Start Engine has been around a long time, but their trends, powerful to see. I know the numbers are small, but the basic presentation here is pre-COVID, they were doing $1 million a week, $1 million a week in funding. Post-COVID, just for the period analyzed here, was March through June 20. That was during it. They actually had increases in it. And we'll talk more about that later, but you can see why this is actually, with COVID-19, unfortunately here, crowdfunding is even becoming more powerful to me, source of gathering capital. So let's do some pros and cons of the venture capital world. The pros, they do have deeper pockets. They do have experience in guiding high growth companies and mentorship. And one of the third item is they may have the ability to connect you to network of other founders and valuable resources. And finally, they have that proof of valuation in a way. They secure capital. When you secure capital from a venture capital firm, you gain some real credibility, as long as the firm is credible. Moving over to the con side, we mentioned it before, they are less than 1% of companies receive VC funding that come to see them. And that's even declining more. is that word valuation. I'd love to usually know how the audience is, but I'm going to keep this. That word valuation is just the value attributable to your company when someone making an investment. And right now, the VCs are driving those valuations down. They are after returns. Investment terms, we talked about this in the chart. With a VC, they're going to want to watch and control some of how their investment is, such as board seats and protection. When I use the word dilution, it means if somehow you need more money, you need to get clearance from them. And finally, they can exert influence over directions of companies. I say this because a lot of times if they're putting pressure on you, and this says it best, 40% of CEOs are gone within the first 3 rounds of VC financing. Why is that? Because there's a lot of pressure they put in. They need to meet their investor returns. And if something doesn't go as planned, a lot of times you'll find them saying, hey, you got to move together with this other portfolio company of ours. And finally, that's sort of what I mentioned. There is a lot of pressure to grow, sometimes a little bit too fast, in my opinion. So let's move over to the equity crowdfunding world in terms of pros and cons. In an equity round, you, as the owner, set the terms, and you maintain control of those terms. The portals we discussed provide guidelines, and there's professionals that provide guidance because you just need to be realistic with your valuation, but you control that. You don't have the pressure of a firm saying that has investors that want to knock your valuation down, but you control that during your raise. And there's times you can change that during your crowdfunding effort. Building a network of 1,000, this is going back to some of the stuff that gets me excited, in fact, beyond the capital raising and things that solve those challenges we talked about. You build a network while you go through this. They can be brand ambassadors. They like your product. They may not buy like I did this morning an investment, but they're going to follow your product and maybe talk to other people about it. Raise achieves multiple goals, as I said before. You can market your company. The capital is the most important when you're here, but you can market your company and increase sales. We're going to talk about discounts that a lot of companies are offering for their product if you're an investor. Completely legal, which is just another add-on that drives sales and gets support from your investor base. With the crowdfunding, a lot of times at VC, it's a formal process of here's one round, well, let's decide how you're doing, here's another round. Crowdfunding, there is some limits, but generally you can continuously raise capital. And in my opinion, once you go into this mode, you want to continuously be evaluating the market. And when you hit a certain milestone, it may be time. Let's go back out there and test the market and look for some more capital. Equity crowdfunding cons. There is costs involved. I don't want to, I'll mention it next point. There's costs involved, accounting, legal, but there's no guarantees that this will come. If you're sitting across the table from a venture capital firm in general, if he says, I'm in, sign a term sheet, and you guys close. There's no guarantee on the equity crowdfunding side. There is minimums you set and maximums. If you don't hit the minimum, money is returned to your investors. Here's an item that's a con. When you go out with a crowdfunding round, your companies are public based on the form you fill out related to the Regulation C we talked about and the Regulation A+. The cost we talked about, and everyone has a little bit of reporting requirements. That Reg CF world, you're reporting annually to whoever your investors are. The Reg A+ world is a little bit more often. So these crowdfunding, that term I used is portals. That's where you have to go with a Regulation CF, smaller rounds, now up to 5 million though. You have to go to these approved portals, let's call them. They're platforms that are approved by FINRA/the SEC and have the compliance requirements and everything built into them. But what to look for, there's 54 FINRA approved. Now I talked about all those other crowdfunding types. There is probably over 1,000 crowdfunding portals for all the different types, but there's 54 for the equity crowdfunding area. And what to look for in a platform: number of campaigns they launched the last 12 months. That would be number of companies they had out there trying to market, how much funds they've deployed, the number of members they have in the portal. This is all public, and you want to ask for this. You want to dig deep into, does this match? This item is how much. A lot of these crowdfunding portals know they have to get more involved, need to make sure their companies are successful, so they're dropping a lot more resources, bringing on advisory. This particular crowdfunding portal is a TV show. And down here, you just want to keep an eye if they're doing new things in new markets. So stats on the top crowdfunding CF, the smaller world portals. But I need to say, since adoption of that rule in March, this has skyrocketed even more. Companies are now, Reg CFs are easier to do from a compliance standpoint, and now they're up to 5 million. But these charts we can get to, it's facts from the internet. And across the top, you see the number of campaigns, investors, and I'm going to just put down, WeFunder is one of the larger in this Reg CF world. You'll see what they raised. And here's a number of others. I don't want to go through each. It's a resource you can look at that will help you say, hey, let me take a peek at these for my company. Profiles of those portals, another item that we can get to you. Consider up there is extra due diligence, investor fees you want to know about, what security types they offer. Here's WeFunder again. They take fees, primary securities, unique investor incentives, the others. One last thing about the profile of top portals is you want to look for the investor resources that I talked about. I'm not going to get lost in the secondary market item with this crowd. It's just an area that, say you get into, since it's a private company, an investment. Sometimes that company doesn't have equity, doesn't have a sale or go public. So now they're creating secondary markets to even trade some of your private shares. Broker dealers involved. Can you invest with credit cards? And down in the end, this focus. We again look at just crowdfunder. Runs across the board, and its deal focus is varied. Positive and negative impacts of COVID-19 on crowdfunding. I'm going to just put this chart up quick, but some of the things, and it's positive to a lot of the startups. Although you're seeing it's gotten a lot tougher for them to get investors to platforms, you're seeing the crowdfunding portals start looking for more deals. They're being more critical, but they're looking for more deals. That's your 32. And down here, you'll see new business models that they're trying to put out there. You're seeing more companies take equity positions rather than this P2P means peer-to-peer. That's debt. They're supporting the companies. I am a strange bird in a way because I do have a CPA and I have an MBA in marketing. Sort of a dual personality, but we'll leave it at that. In a crowdfunding round, this is important to understand. Marketing is king here because you need to get to the community, as many of them as you can, in a compliant manner, but you need to build your community, and that's generally all done through social media. The beauty these days is every dollar you pretty much spend in the digital world, you can now track. A CPA loves that. We can see what type of return you're getting on investment. The famous across the board items of Facebook, all that areas you want to do strategically depending on your audience. And you can target a lot of those deeply if you want to go after a certain type of individual, certain age, but you can drill down. And now we're even seeing, which is showing you how they really want the small business to get access to funds. They want to democratize a way to get capital. And I don't think it went live now, but the first show on TV is showing up where it follows the life. It's a reality show of a company raising the bigger rounds. But literally important thing is people that watch the show can click on a button and invest, unlike anything we've ever seen before. Now, key factors for a successful campaign. I'm using that campaign because you can see that campaign word is your raise, but campaign alludes to marketing. Another important item, you'll find the right resources within a portal, or you can find a lot of advisors popping up nowadays saying they support it, but it's an item you need to be very careful about vetting those type of consultants and advisors. So key factors for a successful campaign. I want to tell everybody that's on the call, your community is a marketing driver. Forget about a moment for raising money, but you should always in your head, we just got involved with a company that does lawn care. From the start, we said, anybody you talk to, he wasn't used to it, think of him as your community. Try to get some information on him. Maybe you just want a lawn job, but you never know what you do. People, no matter when you're plan to raise capital, start developing and gathering information on the crowd from day one. When I use that word, own the rules, when you look at a portal, you are going to want to do a deep dive. Sometimes they publicize certain items, but we want to see how real successful they are in your area. You want to carve up the piece to understand, hey, they're really having success. We've seen music companies get funded, films get funded. Insight, integrity, just a huge part of it, because that's where you run into the trouble of them. People may or may not have been on a dating site that all of a sudden you show up and it's very different than you thought, but I'll leave that alone. Customer feedback, these are all business items too, but it's important to a crowdfunding round. Feedback is a key factor. Rewards I talked about, key tool to think about making part of your investment. Those can be discounts. We see a lot of opportunity for discounts for your product, first user, of the product when it comes out. And make sure you show you're in it for the long term. What that sort of says is you don't want to show too much about, hey, my success is conditional on factors outside of my control. And finally, just always have that action plan. Don't let successes or failure throw you off track. Circling back to what I started with the attitude, you're going to have ups and you're going to have those downs. It's inevitable. So I'm going to finish up now with evolving funding opportunities that I'm not going to take a deep dive into these. I just want to mention it. There may be additional webinar we go deeper on this, but we'll talk with everyone. But where are these evolving from? It's sort of what I talked about before. How do you get that investor who usually just wants a return to really be aligned with the success of your business plan? How do you get that? Crowdfunding heads there clearly, but you'll see some new stuff coming up. And if you're in the consumer world, you're selling on the internet, you're finding a lot more of this. Digital-based financing, no equity. They're just giving you some money for a piece of the revenue. Powerful tool, as long as you structure it right and your product has enough margin to allow you to give away some of the sales. I love the tool. It gives you money for marketing, and you just got to use it in the digital world, which we can measure. You're seeing, this world sounds like a fancy term, yield generating revenue stream financing. What that means is, again, not taking pieces of equity in the company, not losing your company control, but you're seeing royalties, energy contracts. They're getting, again, a piece of the inflows in the company. And real estate's a big one on that. They're getting a piece of, could be down to the level of rents. But again, it's driven for, they should be trying to help with what you're doing. Skipped, well, two, but this word fractional financing, it's becoming so popular. I'm not saying that for everyone right now, but you're seeing collectibles, art, expensive cars, films, racehorses, being financed directly by a number of people to get involved. Very expensive homes, vacation homes. It's something you might explore if you're in some of those areas. But again, it's sort of items that you may not otherwise get into. So moving back to an item that's I find very interesting is what's called initial licensing offerings. You're seeing these. It's very similar to number 2. However, you're having companies now sell. It's not equity based. You're not giving up equity in your company. What it's built on is you're giving licenses out to sell your product. Again, driven towards the consumer. You're giving licenses out, territorial, to sell your product. And that person will get a piece of that sale. But the unique thing that's evolving out of initial licensing offers, so use the word ILO instead of IPO that people are used to, is that you also will, as they're structured, get a piece of some of the net profits of the company. So there's 2 wins there. Something that probably worth talking to a professional more about. I just put these out there as alternative options. And then we've also seen, which look like you want to get your consultants that are involved with you. Vendor financing has been around. But now I like to almost force it, saying, hey, is this vendor, is this consultant ready to put himself on the line for what he's supposed to deliver? And you can ask those questions. Because if he backs off quick, maybe they won't give you financing their fees, but ask the question, see if they back off and say, oh, no, we don't do any of that. And how that works would be, do they help you on the revenue side? Do they help you? I'm not saying all of these are easy to get at all, but they are items that are popping up, and I love to see them because they're aligning the investment world with your business plan. So I hope that gave you a little piece of crowdfunding on the basics. And Tim, I am finished. So
well, thanks. That was great. We'll now use the remaining time for Q&A. We'll take as many as possible up to the end of the 1 o'clock time. And so please submit your questions through the Q&A section at the lower part of your screen. So we do have a few in the Q&A section. Teresa is asking, will you discuss the difficulties of actually getting paid by the expanded government programs loans? She said she applied but was approved, but has little visibility over when she's getting the money. Have you heard anything about that?
Don't want to, or that's a great question, and I know everybody's suffering, and the SBA and SCORE have a number of resources that talk about that. My answer to that is, unfortunately, be persistent. The SBA is trying their best, but when you call that customer service line, to a lot of times people are still looking for that economic injury development loan. You need that time. They're getting thousands of them. It's just be persistent with the calls. And then there is a resource that I could probably share with Tim, where there's other items to look at. You're finding a lot more opportunity. There's a URL you can go to, and I'll make sure, Tim, I get it to you, that talks about funding sources by zip code. So not only that world of the EIDL that we hear about, there's a lot of opportunities now for, different segment markets, minority owned, woman owned, there's development owned. There's a lot more government resources. I know I didn't hone specifically into probably what you were looking for, but it's be persistent and maybe explore around you all the different funding options, local, development, private. There's more of them popping up.
Right. Another question is, how can we get copies of the information and stats regarding crowdfunding? We normally don't pass out slides to the attendees, but you can rewatch the recording as many times as you want. It'll be out on our YouTube channel very shortly, within a couple of days probably. Next question is, could you show the slide again that shows the crowdfunding portal names and amounts raised? I
I
think
think
it was
that
the
goes
first
back
slide.
to the similar question, Tim, it's resources. And what I advise on some of that, of course, like Tim said, you can come back, revisit the presentation as many. I know that's a powerful item at the site, but if you go to the internet, generally right now what has popped up is independent sources. When you go to these portals, they'll say they do certain things, and I'm not saying they're not giving it, but you'll find a lot of firms now analyzing data. And just go to the internet and say top crowdfunding portals, but I encourage, if most of the offers I expect to be here is your startup, put the name in there, best startup crowdfunding portals, and you'll start seeing the facts. It's another way, it's not that difficult.
Right. There's another question. Do you recommend any consultants who can assist with raising money via crowdfunding?
I'm not going to mention names, but you're going to see a lot of these portals are having, when you learn about those portals, you like one, you look, you dig a little deeper. Most of the portals now, frankly, it's a bit tough to be a portal. What they have to now do is they're evolving their business plan. So you're going to start seeing things like premier partners on these portals. And what that refers, we have a marketing one. You do need some accounting work. So I like to look at the portals, see what resources they have. Because they have to, when they back them, they're bringing more and more of them in. Does that make sense, Tim?
Yeah, right. So your nonprofit, Crowdfunding Global Alliance, Inc., do you do that type of, direction, I guess?
Definitely would steer people, how it's mainly meant as an advocacy education on it. We're very careful about who we'd actually use a name for, but yes, we have the ability to, and we work with certain organizations that after maybe a bit of a consult, we would use the name. I just don't want to go too far.
Right. Yes. So this is kind of a related question, I guess. They said, are there crowdfunding brokers who help you within the journey, and what's their average fee?
Oh, great question. So just a quick, because I know we're running, but that is a good question, because I don't know if I made it clear. So there's something called a registered broker dealer, and those are intermediaries. And as I said, with the Reg CFs, which most of us here, we're going to be in that market, I believe. This is a very large company here, be great, but the Reg CF world is an approved portal. And there is advisors that help, but I really have to make mention that you got to watch out for them. You want to ask them things. These are private consultants. Then you have these registered consultants that are called broker dealers that have divisions that help you through it. But there clearly is, we can also guide you in that area. What consultants, I want to use advisors because their track record's key, and you really got to vet them. I hate to see someone take money. I didn't answer the question about dollars. When you go look up those portals, you're going to see what they charge. They also have right on there, will take you from beginning to end, but there's a fee. I recommend to everybody, those fees are probably larger than you think, but you can carve it up. Maybe someone does the marketing for you that's not part of the portal. So the number varies, but there is resources. They're popping up more and more.
Got it. So Larry's asking, with ILO, you said the agent gets a commission of helping to sell your product plus a second incentive. What was the second incentive piece you mentioned?
So I'm really glad people are listening. So the second piece, you knew the license. You're selling a license to sell a product, and it's a consumer product. The second piece is they're able to structure almost what, the term dividend. A dividend based on how well the overall company does. So that's something new. If the company does well because you're helping, there's a second piece that is involved.
Right. Richard wants to know, what do you recommend for a small business in preparation of the campaign, other than marketing?
Another great question. And it talks about what I recommend is, you saw that item that showed up in my email? You do need to get with a marketing. Most of us don't have in-house marketing organizations. So you want to get with the right marketing organization. You can buy some ourselves, but you want to get, because they're going to lead you through that fancy look. It's important, but I almost want to go back. I know I hate to say what made startups, most startups fail. Whoever asked the question, if you look through that list, make sure you have an answer to the list. And from there, a marketing firm and an accounting firm or a broker dealer can formulate that into a product. So I guess I'd say, make sure you're looking at those items I says that cause and challenge startups and have an answer for them.
Right. William wants to know, are you going to position fintechs against traditional banking?
Want to, define, I would, even though you're seeing banks, realize I don't want to go too deep into this thing, but fintechs is that world we're sort of dealing with here. These finance, I'm hearing more and more about digital investment banking. I came from 25 years of investment banking. Well, what's that word digital mean? Now you're adding digital. Well, it's sort of what we're talking about now. Wow, can you get to an audience in a compliant way, faster and bigger? So the fintech, and my answer is definitely, I'm not pitting it against the banks. The banks we saw have they're specific. They're quite hard to get some money for using fintech type arrangement. I don't know if you use the word actually pitting them against it. I just definitely different avenue to acquiring capital.
Right. Another question is the debt crowdfunding a faster, less paperwork process than going through a bank?
I'm going to go pretty high in this, so I'm confident to say 100%.
Okay.
That's pretty powerful for me to say that, but it's only because these guys do it. They do it. The banks do it too, but the banks have a lot of underwriting. It's unfortunately the history of banks. Credit unions are more local. Sometimes I find them better, but peer-to-peer lending, these companies are massive now, which is debt financing. You do have to watch it. We hear about, I don't need to go through names, but if you pull up debt crowdfunding, the process for up to $50,000 can be overnight.
Wow. Yeah. Julie is asking, where do you get the permission, or where do you file? Does it have to be registered for your crowdfunding project?
Almost like there's another question. Registered, I'm not exactly sure how what's meant by registered, but maybe it means this. We talked about regulation. Whenever I use that word regulation, donation-based, rewards-based, debt financing that have no securities ownership of your company, fall in that world of registration requirements. And when I say registration, that regulation CF and Reg A, you do need to file a form, and the Form C for Reg is filed with the SEC. And I encourage everyone to go, hey, look up on the internet Form C. And you can see the pieces of a crowdfunding, but that form needs to be filed once you're ready to go. There may be another opportunity. If you wanted to explore, I just mentioned this. There is rules allowing you, has to be very careful. That's what I want to make sure. There's abilities now to test the water, it's called, with crowdfunding. And that means just what it's saying, but you need to follow some rules. That's before you go out, before you file that Form C, you can go out with a presentation, but requirements, please, there's guidance, we might be able to help. And Reg A plus, $25 million or up, total different process. It's much more involved with the SEC, the Securities and Exchange Commission. and there's often obviously a broker dealer involved. So I hope that's
Very
okay
good.
with registration.
Terrific. That's all the time we have for questions. Bill, they are asking for your contact information if they have further questions. I don't know if you have it on the on a PowerPoint slide you can put up, or just tell them, or.
I don't think, yeah, I guess the best item to do, should I put it in the chat? Is that okay, Tim?
That's okay. You can type it in chat while I wind up here. As a
And
reminder, a recording of this webinar is available within a couple of days on the fairfieldcounty.score.org website. Please check our website for information on upcoming webinars. Again, SCORE offers free individual counseling, so please use the link on the screen or visit our website and click Request a Mentor. We are available for sessions via phone, email, and video currently. Also, please fill out your evaluations that will be sent to you at the end of the webinar. On behalf of SCORE, I'd like to thank you all for attending today's SCORE live webinar. In closing today, a big thank you to Bill Schloth. Bill, thanks a lot. That was great. And Bill's contact information is now in the chat window if you wanted to jot it down. Thanks a lot, Bill. That was terrific.
Yep, just keep that positive attitude. Thank you, everybody.